Let me ask you something. Have you ever known exactly what to do in a trade, but still failed to do it? Have fear, hesitation, or hope ever pushed you to break your own rules? If yes, then this audiobook is for you. Welcome to Page Turners, the channel where we don't just read books, we understand them, reflect on them, and apply their lessons to real life. Today, we explore the disciplined trader by... This book is not about trading strategies or indicators. It is about how a trader thinks. Mark Douglas explains that most traders fail not because of bad analysis, but because of fear, lack of discipline, and emotional decisions. The market does not defeat traders. Traders defeat themselves. Part 1. Chapter 1. Why I wrote this book. Most people believe that trading success comes from the perfect strategy. This is not true. Mark Douglas explains that only a small number of traders make money consistently, while most traders lose year after year. The main difference is mental discipline, not intelligence or tools. The author shares his personal story of losing everything he owned. Through this painful experience, he realized one important truth. Open quote. The problem was not the market. The problem was how he thought and reacted. Close quote. Key lesson. Trading success comes from self-control, not market control. Chapter 2. Why a new way of thinking is needed. In normal life, hard work gives rewards, rules and structure exist, effort usually leads to results. In trading, effort does not guarantee money. There are no rules unless you create them. The market is uncertain and always changing. Because of this, the thinking style we learn in daily life does not work in trading. To succeed, traders must learn a new way of thinking that accepts uncertainty, risk, being wrong. Key lesson. You cannot trade successfully with your normal life mindset. Part 2. The nature of the market. Chapter 3. The market is always right. The market does not care about your opinion, analysis, or prediction. If price moves against you, the market is not wrong. Your expectation is wrong. Many traders argue with the market instead of accepting reality. Key lesson. Successful traders accept market information without emotional resistance. Chapter 4. Unlimited profit and unlimited loss. Every trade has unlimited profit potential, unlimited loss potential. This creates fear and emotional pressure. To avoid fear, traders must accept risk before entering a trade, decide how much they are willing to lose. If you do not accept loss in advance, fear will control your decisions. Key lesson. Accepting risk removes fear. Chapter 5. Prices are always moving. The market never stops. There is no clear beginning or ending. Many traders try to predict exact tops and bottoms. This creates frustration and emotional stress. The market does not move according to personal expectations. Key lesson. Trade what you see, not what you hope. Chapter 6. The market has no structure in trading. No one stops you from trading too much. No one forces you to follow rules. No one protects you from losses. This freedom is dangerous without discipline. You must create trading rules, risk limits, entry and exit plans, and most importantly, you must follow them. Key lesson. Discipline must come from within. Chapter 7. Reasons do not matter in the market. The market moves because of supply and demand, not because of logic. Traders often search for news or explanations, but price moves first. Understanding why price moves is less important than accepting that it is moving. Key lesson. Price action is more important than explanations. Chapter 8. The 3 stages of a trader. Mark Douglas explains 3 stages of development. Stage 1, mechanical trader, follows rules strictly, focuses on discipline. Stage 2, subjective trader, uses experience and judgment, understands market behavior. Stage 3, intuitive trader, trades without fear, acts naturally and confidently. Most traders never reach the final stage. Key lesson. Discipline comes before intuition. Part 3. Understanding yourself. Chapter 9. The mental environment. The market itself is neutral. It does not create fear. Fear comes from your beliefs and past experiences. Your mind decides whether market information feels like a threat or an opportunity. Key lesson. Change your thinking, not the market. Chapter 10. Beliefs and past experiences. Past losses create fear and hesitation. Traders often treat every new trade as if it will repeat the past, but each trade is independent. Key lesson. One trade has nothing to do with the next trade. Chapter 11. the need to adapt. The market is always changing. Rigid traders who refuse to adapt struggle emotionally and financially. Flexible traders survive. Key lesson: adaptation is more important than prediction. Chapter 12: Understanding Goals. Many traders focus only on money goals. This creates emotional pressure. Better goals are following rules, managing risk, staying disciplined. Money becomes a result, not a goal. Key lesson: focus on process, not profits. Chapter 13: Managing mental energy. Fear, stress, and overtrading drain mental energy. When mental energy is low, mistakes increase, discipline breaks. Professional traders protect their mental focus. Key lesson: a calm mind trades better. Chapter 14: Changing Beliefs. Beliefs change through repetition and experience. Discipline grows slowly through consistent rule following, small controlled trades, emotional neutrality. There are no shortcuts. Key lesson: consistency creates confidence. Now Part 4: Becoming a Disciplined Trader. Chapter 15: The Psychology of Price Movement. Price moves because of human behavior: fear, greed, expectations. Markets are a reflection of collective psychology. Key lesson: understand people, not predictions. Chapter 16: The Steps to Success. Mark Douglas gives a final framework. 1. Accept risk. 2. Define risk. 3. Follow your rules. Accept outcome. The market is not here to test your intelligence. It is here to reveal your discipline. When you stop fighting uncertainty, when you accept risk without fear, and when you trust yourself to follow your rules, trading becomes simple. Not easy, but clear.